Good morning, everyone. My name is Cammie Scott, and on behalf of myself, I am the NAIFA president and the entire executive board and the entire board of NAIFA. I would like to welcome you all here to our town hall meeting. This is our second week of town hall meetings. Last week we had an overwhelming response to the town halls. And so this week, today in particular, we're going to be covering the CARES Act. Now, if you've missed any of those previous town hall meetings, you can go back and you can watch those. There's a special screen for those, a special web page for those, and you should have been able to see those when you registered for this event. So if you've missed anything, don't worry about it. We do have those recorded for you. Now, during today's meeting, we're going to go through the CARES Act, but then we're also going to give a quick update on what's going on. Our CEO, Kevin Mayu, he's going to talk just a little bit about what we're doing and how we're working with ACLI and some of the other groups out there as far as working with our carriers and working with our corporate partners to make sure that we're advocating on your behalf during this difficult time. Then we're going to kick into our speakers, and we'll have Diane Boyle, Todd Villarrubia, Keith Gillies, and Mark Massey talking, and they'll be talking about the CARES Act and really sharing some different ways that you can use this and some tools that you can use in your practice. And really, that's the purpose of these town hall meetings, is to ensure that you all have the tools, that you have the resources that you need in order to operate your business during this time. We are your partner. We're providing things that you need in order to operate your business. And so as a result of that, and we're rolling lots and lots of new tools out. If you haven't seen it, take a look at our new website. Take a look at these new tools. We've got some special resources. We have a whole list of resources that you can use relating to COVID-19. We've also got some new downloadable collateral that you can send to clients and to prospects and that you can customize those. We've got a collaborative library. We've also got an opportunity for people, if they would like, to engage with us via video, to create some consumer-facing videos, because we do have a new consumer website as well, financialsecurity.org, and it provides a number of tools for consumers regarding financial literacy and really helping them during this time. So if you'd like to get involved with that, we'd love to have you be a part of that. You're welcome to reach out to us. There's a tab for you to get involved and for you to record some of those videos as well, as we really reach out and take care of our clients and of our customers and really consumers in general with that. So with that said, let's talk about what's coming up. We've got a series of town hall meetings. We're moving to the 2 times a week. We did that this week. We've got the remainder of April planned, and we've got really a rock star lineup. Special thank you to Tom Michael, Larry Holzberg, and Brock Jolly for really working on putting together this great lineup of speakers. These are the types of speakers that you would see if you were attending conferences, and we all know nobody's really going out to a conference, so we're bringing the speakers to you. We've got Jamie Hopkins, Bill Cates, Dave Resegi, Joe Jordan, Deidre Van Nest, Wade Fowl, David McKnight, and Scott Brennan. They're all coming up in the month of April. So we've really got a knockout team of speakers here for this. So lots of good things to come with that. At this point, I will turn it over to our CEO, Kevin Mayu, and let him give us a quick update on what's going on and some of the things that we've been doing to advocate on your behalf. Because remember, this is an association that is run by members. It's designed for members, for advisors, for agents, to help them and to advocate on their behalf. So Kevin, take it away.
Thank you, Cammie, and good morning or good afternoon, everyone. Thank you for joining us for this NAIFA Town Hall today. I'm going to be very brief because I know we all want to get to the substance of today's Town Hall, which is to discuss the CARES Act and its applicability to you and to your clients, and some good information from some great subject matter experts as well as practitioners that can really help you understand that act. Anyways, did want to let you know that, of course, in times like this, a professional association like NAIFA is specifically geared to making sure that you have a sense of community and that you're well protected in environments like this. I wanted to let you know that we sent a letter off, authored with several other associations, to the state insurance commissioners and other regulatory officers in each state for them to help us and to be accommodating as we license more producers during this odd time when fingerprinting can't get done and a lot of other stuff, to allow temporary licenses to be available. And we also sent a communication off to all the CEOs of the major carriers, making sure that you as producers continue to receive your compensation as we go through these uncharted waters. So letting you know, once again, NAIFA has your back. In addition to that, as Cammie mentioned, we have a lot of resources available for consumers on financialsecurity.org. There's an entire COVID-19 resource kit. Please take a look at it and figure out what might be applicable to you and what might be applicable for you to share with your clients as, again, we all go through this time in America. And then I wanted to let you know, again, NAIFA is continuously monitoring and participating in various task forces and meetings of various groups, including FEMA and the White House, as we navigate through this crisis. And as always, we'll keep you informed as to what's going on to make sure that you receive up-to-date information at all times. On the next slide, we talk about what we're going to do is we've had to reschedule the congressional conference, which is the largest legislative fly-in in the entire industry. We've had to bump that from being May 19th and 20th because, of course, of what's going on. So instead, we're going to turn it into a virtual NAIFA Impact Week. And this is free and open to everyone involved in the industry. And so on Tuesday, May 19th, we're going to have a diversity symposium. On Wednesday, May 20th, Advocacy in Action, where you have an opportunity to hear again the latest of what's going on in DC, and even hear from several members of Congress, giving you their perspective as to what's happening and what's likely to happen. And then again on May 21st, we're going to have a leadership day. It talks about leadership tools that you can use in the new reality that we face today. So NAIFA is constantly working for you. And with that, let's get back to the program. Thanks, Cammie.
All right. Well, at this time, I would like to turn it over to our guest speakers. Our guest speakers for today are Diane Boyle, and Diane Boyle is our VP of Government Relations for NAIFA. We've got Keith Gillies, and Keith is a past president, a recent past president for NAIFA National, Todd Villarrubia, and Mark Massey. And so at this point, I will turn it over to Diane. Diane, tell us about the CARES Act, and then we'll talk with Keith and Todd and Mark about how they've implemented that and how they're using that in their practice.
Great, thanks. Before we even get started with the CARES Act, I think it's really important to know that there are 3 phases to the coronavirus relief. Zach, can you release the slides to me and I'll click through them? And Keith, if you can tell us a little bit about what you've been doing since this has come out. Just a week ago, the CARES Act was actually enacted, and what your role in this conversation will be. And then we'll start going through the package and have a conversation around what it contains, what it means for you as advisors, and how you can assist your clients. You're muted, Keith.
Wait a minute. How did I? No, I'm not. Okay.
There you go.
Good, good. So thanks, Diane, and thanks for everybody who's on the webinar today. Our organization found it important that we get something out to our clients and our advisors very quickly. So after the law was passed by the Senate, we began working on the CARES Act I'm talking about. We began working on a webinar for our business owner clients, which we held actually Tuesday, and it was very well attended. Then after that, we went through these very slides that you have, Diane, with all of our advisors. And as we went through the slides, we talked to our advisors about how they could take the information from the act that was on the slide, the concepts, and use it with their clients and business owners. So let me tell you a little bit about the team we put together. We have always used the concept of having a team of experts. And when Elena called me to ask me if I could put something like this together, I said, sure, and I have the perfect team to do it. It's the team that we use on a regular basis. So 2 of my team members are here. Todd Villarrubia is actually in our conference room. with us, our New Orleans conference room. We are practicing social distancing, as you can see, but we thought it would be better for us to get here. And also, and Todd is a board certified tax attorney specializing in estate planning. He and I have worked together for over 2 decades, and he's a true expert when it comes to certain things that we'll talk about today. And we also have Mark Massey. Mark is the vice president of SMA Services, a large regional TPA firm. And I've known Mark for also about 25 years, and he is a real expert on retirement planning. There's lots of things in this act that involve retirement plans that we think are critical. So as we go through this, we will share ideas about how to go present this to clients, some ideas about how to stay on top of this, and then also some opportunities that we see. So with that, Diane, thank you. I'll flip it back to you. So, by the way, the format will be, we'll go through a slide, and if we think there's comments there, I will call upon one of our colleagues to talk about that slide. Even you, Diane.
Excellent. Okay. Well, let's get started. So as I mentioned, the rollout of relief sort of came in 3 packages. We're going to focus most of our time on the CARES Act, but to get there, I wanted to go through the other phases. The first phase was really designed to do medical and healthcare funding, but there was a small business loan that came out of that, and that was signed into law on March 6th. What that loan does, and we'll talk about it because it was amended as part of the CARES Act too, so the true benefit, in my opinion, sort of comes once the CARES Act kicked in. But there is an expansion of sort of the economic injury disaster loans. And if any of you have serviced clients who are in areas that have, natural disasters, these loans are the same types of loans that go into play. Low interest rates for small businesses, even lower for some nonprofits. What I think is really key is that when you get to the CARES Act, and we'll do sort of a side-by-side, that's something that you really want to focus on, is when you're talking to those clients, which of these loans that are out there might be best for them, which are they eligible for, and how does it apply to them. But the beauty of the EIDL loan is that it comes with an advance. And so there's a $10,000 advance that wouldn't have to be repaid. And that's part of the CARES Act, but you go through the same application process. Just as you do for the standard small business administration loans, you're going to apply, and your definition of small business and what you're eligible for is based on a classification system. What I've done is put in for you, our members, if you're looking at it, what would the small business agency or brokerage look like? And that would be basically $8 million in revenue. For a portfolio or an investment advisor, you're looking that it would have to be annual sales less than 41.5 million. One of the provisions, because even NAIFA as an association is looking and saying, is this something that we need to look at? The applicant needed to affirm that they're not a business in the business of lobbying, but it has to be a majority portion of your business. So actually some of the associations, even if they have lobbying as part of their portfolio, if they're not a lobbying firm, would still qualify. So I think that's something to pay attention to. Then you get to,
let me go ahead and comment on that before we jump to phase 2. So if you can just go back 1 slide, please.
Yeah.
I would invite all of you who have your own businesses to apply for the SBA loan. This is directly through the SBA. You do not need to go through a bank. The process is really pretty simple. It's 3 steps. What you will need before you do that is the date you enacted your business, your revenue from 2/1/19 through 1/31/2020. Your gross revenues, cost of goods sold. You will need if you have any partners, you will need all of their information, where they live, social security numbers. You will need also the date you started your business. And you do that, and it's all automatic. It runs pretty smoothly. It will take about 10 or 15 minutes. And you should get with all your business clients to make sure that they're doing the same thing with this. So this is a big piece that was enhanced by the CARES Act, and we are helping our clients walk through this as we go along through this entire process. The opportunity right now, ladies and gentlemen, on the call today, on the webinar, is that you can differentiate yourself from other people by providing this type of information to your clients. Thanks, Diane.
Keith, may I ask a question that I think is going to be important for people as they do this? When I filled it out, of course, one of the questions they ask is about the revenue, but they also ask about the cost of goods sold. A lot of people on this call probably aren't going to be familiar with that concept. Can you talk about how they can define that, number one? And number two, what's the relative impact if you have a high percentage of cost of goods sold versus low?
I think that gets in really into what they're talking about, identifying when it comes to revenue numbers and so on. For a lot of us, we won't have cost of goods sold. So the cost of goods sold, let's say if you're in a retail business, Todd, and you're selling widgets and you sold $10 worth of widgets, that would be your revenue. But the cost of the widget is $5. That would go into your cost of goods sold.
Thank you.
Okay, Diane?
Great. And Todd, when you speak up, if you could speak a little bit louder for us. I had a little trouble hearing you. But during that social distancing, the volume went down a little bit too. So phase 2 was basically the Families First Act. And what that did was provide, from our perspective, the paid leave requirements. And so that's something that you want to pay very close attention to because the guidance was issued on the 1st, but compliance was also on the 1st. So you should be providing notice to your employees if you have them. You should be talking to your clients and make sure that they're in compliance. There is an exception for employers with fewer than 50 employees. We can get into the details of what it takes, but it basically you have to be able to demonstrate that it would jeopardize the viability of that business going forward in order to be eligible for that exemption. I don't know that there's a plan to exempt a good number of businesses. So by and large, you're looking at compliance with the new paid leave and the paid sick time as well.
Yeah, so on this, Diane, this is different than the Paycheck Protection Program that we're going to be talking about in a little while. And there are some entities that do not qualify for the Paychecks program, but that would qualify for some of this. Would you talk about that a little bit, Diane?
Yeah, I will, and let's get through. I'm going to show, if you look, we also have a slide on which I realize it's difficult to read on the screen here now, but we will make the slides available to you that goes through what's required, who's is required by, and what the employees actually need to do, how you need to demonstrate. And so I think that's a really good example of how the paid leave requirements sort of work. The government is going to provide that in the way of a tax credit, but you're going to have to wait for that payment to come back to you. So there is some burden, if you will, on the employer that's putting this in order to comply with the requirement, but know that it does come back to you. They're on the final rule and guidance. As I said, the final rule came out yesterday. There are a number of fact sheets. This is all from the Department of Labor Wage and Hour Division that puts out this information. What you want to pay particular attention to is the posters, which will give you the information that you have to provide to employees, as well as the field assistance bulletin talking about a little bit of leniency on enforcement since they're just rolling it out very quickly.
Diane, on this slide,
Yes.
this was provided by NAIFA, I believe, a couple of weeks ago. And we took this in its entirety, sent it through our compliance department and fired it off to everybody in our database. This was great information. And we got some really good feedback from this. So I think that's available on the website from NAIFA. And if you haven't done it yet, everybody, please go get this, send it, put it on your letterhead, send it to your compliance department, and get it out to your clients.
Yeah, it is. And what was missing, Keith, on yours was sort of this final regulation that came out yesterday. But this information is on NAIFA's website. And if you visit the Advocacy and Action blog, you'll have information broken down into chunks. So if you're looking at the paid leave, there'll be an article on that with those references. If you're looking more for what loans the client should be considering, there's something on the loans and a comparison of the loans, which I think is very helpful. Sometimes it's overwhelming to see it all at once, but we've tried to put the different resources on different slides so that you have those available. And as I said, the slides will be made available to you so you'll have access to that information. Let's move forward. All right, so this is the big daddy of them all, the Historic CARES Act. It's a $2.2 trillion piece of legislation that is designed to provide economic relief to sort of stimulate the economy. And so we have, and we'll go through this in detail, we have tax rebate checks that are going out to individuals. We have expanded unemployment insurance. There are flexible spending arrangement and HSA, HRA enhancements. There's a charitable giving incentive, retirement savings provisions that, Mark, I know we're going to call on you to go through some of those. There's the Paycheck Protection Program for small businesses, and that includes the self-employed. And this is the one that you're really going to want to compare with that disaster loan and figure out which is sort of right for you and for your clients. There's an employee retention tax credit. There's delay in payroll. And so what you're going to need to consider too, and we can talk about that, Todd, I'm sure you have some commentary, is when you're sitting down with clients or when you're looking at this for yourself, if you're choosing the Paycheck Protection Program, which is a really generous program, you're not going to be able to take advantage of the employee retention tax credit. You're not going to be able to take advantage of the delay of the payroll tax payments for employers. So you're going to have to balance those, and you need to do the math, which I don't do. So somebody else is going to have to do that, and you're going to have to do that individually for each of the clients to figure out what the best fit is and help them make those decisions. There's a carryback of net operating losses. There's employer provided tax-free student loan provision in there. And all of this was signed into law on the 27th. We have a link to the full text if you want. As I mentioned, it's 883 pages. So if you really want to keep your kids busy, it might be something to have them do a little reading on. Let's get into some of the details. The tax rebate, that's for individuals. So you're looking at $1,200 per individual. They will come out automatically. If you file taxes, you'll get that tax rebate. The full rebate is for individuals with incomes at or below $75,000. For married couples, it's $150,000. It phases out, and it phases out completely for those with incomes at $99,000 or $198,000 for joint filers.
So Diane, we live, as many of you know, in a real hot spot in New Orleans, and this is very important to a lot of these poor people who are out of work here and across the country.
Yeah, it is of great interest to my adult children. Okay, unemployment benefits. There are unemployment benefits that are a little different than were previous unemployment benefits. It's expanded, and so it's still going to be state rules, but you're going to see an additional $600 a week that's coming from the federal government. It expands those unemployment benefits as well, so it's covering more workers. It includes self-employed and independent contractors, independent advisors, such as many of our members, and clients that typically weren't included. You know, your gig workers, some of your Uber drivers, which seems to have picked up and may taper down now that people aren't traveling. But those individuals are going to qualify for unemployment benefits.
Hey, Diane, on this, we're getting some calls now, particularly from clients here who are heavily affected by the coronavirus, about bringing their employees back. And one call in particular yesterday, he said, you know, that's $15 an hour, just that $600 plus the state unemployment. If you do 15 times 40-hour week, he said, that's more than I pay some of my laborer type employees. He said they probably don't want to come back to work if they can get that. So that's just some of the things that we're seeing popping up, the reality of this act as people start to see it.
Right. On the enhancements to some of the flexible spending arrangements and health savings accounts, on the individual side of it, you're looking at the inclusion of over-the-counter drugs. It expands what is actually considered eligible expenses. On the employer side, you're seeing a safe harbor component that will allow them to add telehealth services without them losing their eligibility for being designated a, forgetting what the heck we call it, the high deductible plan, so that they can remain a health savings eligible. So it doesn't kick them out by adding that telehealth component. And the changes to the eligible expenses are retroactive, so it goes back to the 1st of January. On the charitable giving incentive, there's a temporary deduction of up to $300 available for cash-only, non-itemized tax filings. It's available to both individuals as well as businesses there. Mark, this is where our guys are really going to get.
Go back one, because this is huge on this charitable giving.
Yes.
There are great opportunities here. Todd, let me flip this to you and talk a little bit about.
Sure. So with the high net worth business owners, for the people that are on this call, you know, I cannot stress to you enough that, you know, this is an unprecedented attack on the business community. And no, I cannot think of a time in our history, frankly, where there's been such, you know, an attack that has been across multiple industries and across geographic regions. I think it's having a more profound impact than even, you know, things like, you know, World War II, the Great Depression, you know, and because of that, you have an amazing opportunity in the neighborhood to get in front of your business owner clients, to learn about this and to then help them through this, because what we have found over and over again, as I've worked with my business owners across the country, as this stuff is developing, is that the business owner community is really, you know, they're in a spot where they don't understand all of what's available. And one of the most powerful things is that there's a lot of people in the high net worth community who are going to be very interested now that they've literally removed. How it typically works is that on the charitable giving side, you can only get a deduction for up to half of your adjusted gross income if you give to a public charity. Part of the new legislation now allows for a full 100% deduction. So for your high net worth individuals, the use of a potential CRT or CLT, so a charitable remainder trust or a charitable lead trust, we think, we're not certain yet, we're waiting for clarity on the regulations on this new legislation, but I suspect that, based on my experience, that the CRTs and CLTs will be an accepted form to recognize 100% AGI. And for those of you that have done any sort of advanced planning, there's potential sales there, opportunities for you, obviously, with the wealth replacement trust. And if any of y'all have any questions about that, feel free to reach out to me. I'll be happy to kind of walk y'all through what that would look like.
Yeah, that's why I wanted to pause you. That's powerful for our NAIFA members to know that this is available, that 100% of AGI deduction to charities. Really, really great opportunities for your clients and for you.
Really great information. All right. So now we move into the retirement savings. Mark, you are muted, so if you want to unmute.
I think you just unmuted me.
I'm scaling back. Okay, there we go. The retirement changes. So it suspends the required minimum distributions for 2020. It allows the plan participants to borrow from their balances up to $100,000, and it extends the time for repaying these loans. It waives the penalty tax on early withdrawals. It includes, for the employer side, the single employer defined benefit. The plan sponsors are allowed more time to make up those required distributions to their DB plans, and they can be deferred for a year. The interest on the required contributions for the deferred year still must be paid. But Mark, tell us, what are you doing with clients? How are you sharing this information? How do you see it impacting them? What are some of the questions that you're getting?
Am I on mute?
No, you're
No,
good.
you're good now.
Okay. All right. Well, first off, let me start by telling you the most common question that I'm getting, and I'm getting this at least twice a day, and it doesn't have anything pertaining to this act, but I think it's important for people to understand. And the most common question I'm getting is, I've got a safe harbor plan with the 4% match. How do I get out of it? Okay. And there's actually several things you can do. Most people know about two of them, and most people don't know the third. So I want to be sure everybody understands their options. So option one is, you can, as long as you give a 30-day notification to your employees, you can come out of safe harbor for 2020. So if I put the notice out today, which is April 2nd, then it would say that on May 2nd, we are stopping the safe harbor match for this year. Now, you do have to fund it through May 2nd, so the 30 days still has to be put in. If you take that option, then you are subject to discrimination testing for 2020. And obviously, if you cease the match, you're going to see employees dropping like flies from the plan because there's not a match anymore. It's going to cause some big time testing problems, almost guaranteed refunds for the highly comp. So what I'm suggesting to people that consider, and this is the option that a lot of people don't seem to know, is you can amend your plan document, and I've been amending them for free for people to do this, to where you contribute the safe harbor match on an annual basis, because most adoption agreements read that they're making the match on a per payroll basis. So first thing you have to do is amend the plan to an annual match. Once you do that, the match for 2020 does not have to be submitted until December 31st of 2021. So essentially what you're doing is putting, you're still, making the contribution, you're going to make the contribution, but you're delaying it till this is over. And as long as you envision being profitable at the end of this, to me, that's clearly the best route. So I wanted to bring that up before I get into this meat and potato stuff. So the RMDs, required minimum distribution. Somebody take off my looking at the computer glasses and put on my reading glasses, because some of this stuff on the RMDs, which are required minimum distributions, have to be really read. So there's really four things under this. The first one is, if you turn 70 and a half years old prior to 1/1/19, you do not have to take a required minimum distribution for 2020. And let me back up by saying the four changes that I'm getting ready to tell you about do not pertain to IRAs. This is for 401ks, 403bs, 457, money purchase, all types of qualified defined contribution plans, okay? Second, if you turned 70 and a half in 2019, but you hadn't received your first required minimum distribution for 19, then you do not have to take your 19 or your 20, okay? So they're getting a 2-year pop there. The third bullet is, beneficiaries who are receiving life expectancy payments will not be required to receive their 2020 beneficiary required minimum distribution. And the last is, beneficiaries who have an account balance in the plan subject to the 5-year distribution rule may extend their required distribution by 1 year. Full distribution of the account must be paid by the 6th anniversary of the participant's death. Okay. One last thing. If a 2020 required minimum distribution is provided to any of those above, it may be rolled over to an IRA or another employer plan. If they do that, though, they have to take the RMD. So that covers the RMD section. The biggest play that we're hearing about is about loans and distributions. And these are the only two things that are really germane that are going on. And let me start by saying these are not in plans now. So if people want to take advantage of the increased distributions and increased loans, it requires a plan amendment, and they can do either or both. So these aren't happening automatically. Now, back to your original question, you asked me what we're doing. I got something out to all of our clients. I think Monday was when I sent it out to cover it, and then giving them the options of adding these, and some are adding one, some are adding both, some are doing nothing. It's because if you do, you don't have to do anything if you want. And then we could discuss the benefits or non-benefits of doing that. But essentially what it does is you can take up to $100,000 or 100% of your vested account balance without paying. I mean, normally if somebody takes a distribution from, let's say, a 401k, we have to withhold 20% for taxes. We don't do that anymore. So if you ask for, let's just say I take $30,000 out. If I take $30,000 out, I'm going to get a check for $30,000. Then the 10% penalty that you would normally have if you're under 59 and a half years old, that's waived. So you don't have to pay the penalty. And then you have up to 3 years to pay back, I'm sorry, to pay the taxes on it. So you could say, all right, I'm going to take this $30,000, I'm going to pay it back $10,000 for the next 3 tax years, because as we all know, Uncle Sam always gets paid. So they're just allowing us to defer it over a 3-year period. Or you could say, just hit me with all 30,000 at once, etc. So, that allows you, in my opinion, the retirement plan is the avenue of last resort. But for people who need it, at least they got it. All right. The other portion pertains to loans. So you could say, the first thing, you'd have to have a loan program in place, and not all 401ks have loan programs, but I'd say 75% do. So assuming you have a loan program, the way it worked prior to this act was you could borrow up to 50% of your vested account balance with a maximum of $50,000. That was your general loan language. They extended the $50,000 loan amount to $100,000 and the 50% rule to 100%. So let's just stick with the 30,000. Let's say that instead of taking the distribution, that I just took a $30,000 loan. So what's changed? I can suspend loan payment. Well, first off, let me back up. Let's say I had a loan already, because a lot of people already have an outstanding loan on their plan. If a participant has an outstanding loan, they can suspend their loan payments for up to 12 months. So if I'm paying $38.22 a pay period to repay a loan that I took 2 years ago, and I'm in dire straits financially, I could suspend those payments for 12 months. Now, this relief expires on 12/31 of this year. So the loan, being able to do this, you have a window of just through the rest of the year. So you can borrow more, you have longer to pay it back. So that gives you the option of taking either a loan or a distribution. If you are furloughed or laid off and you are still considered an active employee, you could still suspend the loan repayments. In other words, I'm a bartender at, in the French Quarter, and I've been furloughed because the restaurants are closed. I could suspend my loan payments for that too. Okay. we could talk about DB plans. They're a small percentage, I'd rather focus more on defined contributions, but essentially you can defer your obligation for a year.
Yeah, so Mark, as you know, we do a lot of business together, and our organization has about 250 plans, and we sent out a detailed letter yesterday to all plan administrators that we would like them to consult with us or with you or both of us as before they get into making these types of amendments, because as you said, this should be, and we should counsel and advise our retirement plan administrators and clients. As Mark said, this should be the last resort to get money, and they need to be very careful as they make these amendments.
I just had a question come up. I've been watching these questions come up on the chat box, and one I saw that just came up was interesting. It said, if I have an outstanding loan now, can I pay it and then take the max loan? And the question is yes.
All right, so Diane, and for Mark, great job, as we knew you would do. And Mark, we
have
can,
one last thing, I'm sorry.
Okay.
Very important to understand what the definition of an eligible participant is to take one of these distributions or loans, because it is defined. Okay, so in order to take one of those loans or distributions, you have to meet one of the following 3 criteria. So it's not just for everybody. The first criteria is you have to have either COVID-19 or SARS. That's one of it. It's not all these, it's any of the 3. The second is you have a spouse or dependent who's been diagnosed with one of those 2. And here's the third. The third one's kind of a catch-all, so I'm going to read it verbatim. And it says, you have experienced, quote, adverse financial consequences, end quote, as a result of a quarantine, furlough, layoff, reduction in work hours, business closure, lack of child care, or other factors determined by the IRS due to the coronavirus emergency. But then the like on hardships where you used to have to prove with, like, if you're a foreclosure, you just have foreclosure notices, etc. They're not doing that with this. So the plan administrator of each individual plan is really going on the word of the employee. In other words, they don't have to have a proof statement that they're having financial troubles.
yeah, thanks, Mark. And Mark, if would it be okay to get your email out to the participants? They can email you with questions.
No, I prefer that. Of course, obviously, yeah. You want me to just give it to you now?
No, we'll send it after the meeting. Thanks. Great update on that. Very, very important part that I think is being overlooked because of the other provisions. Thank you, Mark.
Sure.
Great. Well, so we'll pick up with the next big chunk in the relief package, and that's the Paycheck Protection Program. And that allows loans for small businesses, self-employed. It allows gig workers to take advantage of that as well. And the caveat is that the employers need to maintain their payroll and the loans will be forgiven. Small businesses, that's fewer than 500 employees is how they're defining small business there. Veterans organizations, tribal businesses are included, as well as sole proprietors. Self-employed independent contractors are also eligible. Businesses in accommodation and food industry services. So if you're thinking of restaurants, they're looking at per location, not the entirety of the business. So each location would have to have fewer than 500 employees, and they would be eligible. 501c3s or nonprofits are eligible, but no other 501cs are. So NAIFA chapters, chambers that are structured at 501c6s are not eligible for the Paycheck Protection Program. That's something that we're working on, that if there is a phase 4, phase 5, which we anticipate there will be, that maybe we can have that program expanded, but right now you do not qualify. Physician practices, however, are eligible, and it doesn't matter how they're structured, that they would qualify. Get to the next slide.
My name is Tetherball. This year is my.
Let's, Diane.
Sorry, I'm having.
The Paycheck Program. Okay, Sarah, here you go. This is Why don't you talk about this slide, then I'll comment on this.
Okay, yeah, so we get into a little more detail of the program. So you're looking at the size of the loan is 250% of an employer's monthly payroll cost, and that's during the time frame of February 15th through June 30th. It's capped at $10 million. The loan payments are deferred for 6 months. If you maintain your workforce, that's what we talked about, the loan would be forgiven. Those proceeds are used to cover the first 8 weeks of payroll and other expenses. Some of the other expenses include wages, salaries, the employer paid group health insurance, retirement benefit costs, payroll taxes. The forgiven loans exclude salaries that are above $100,000. Paid leave expenses that are covered through the government. So if you're looking at any of the paid leave that we talked about under phase 2, those aren't eligible in this loan either. The amount of the loan that isn't forgiven will be converted into a regular loan. Although it's a good loan, the terms are not to exceed 10 years and the interest rates can't exceed 4%. The forgiven loans amount aren't included in the borrower's taxable income. The guidance on this, it has to be provided within 30 days of the law's enactment. So we're looking at late April, although we've seen some information already come out. Borrowers can apply for these loans through participating banks. And so we're seeing the time frame, and I thought I had that on a slide too. Let me see if we have it on the next one. Actually, I don't, but there is a side-by-side in the resources, or actually nowhere we put it is if you go into advocacy and action on the blog, we have who's eligible. So tomorrow we start for the sole proprietors and small businesses, self-employed and contractors can apply beginning on April 10th. So Keith, I know you had
We're getting lots and lots of questions about this. So a couple things. The part that is forgiven, is the part that would be used for payroll and payroll related expenses. You can get, I believe it's an additional 25% of that for other expenses to help get you through this difficult time, but that will convert to a regular loan that you will have to
right.
You will have to repay. There's some confusion around that with folks. So the practicality of this is you need to get your last 12 months, you need to get your average payroll expense per month when you begin to fill out the application for this. The other thing is that this goes online tomorrow. I would encourage you to have your clients reach out if they have a banking relationship, to reach out today to find out if their banking relationship is participating in this program. You will need to find out, and bankers are going to be overwhelmed in the next couple of days with this. The other thing is, we talked earlier about restaurants and other people in the hospitality business. The 500 employee cap applies per location. So if I own a chain of restaurants, then I can look at each restaurant separately as far as the 500 person limit goes. And we had a client yesterday. You want to talk a little bit about that, Todd?
Which aspect of it?
About the whole restaurants situation.
Yeah. Well, I mean, you know, it's just simply that he was concerned because obviously, you know, he's doing, this particular client mentioned, I think this is probably fairly representative, he's only doing about 20% of his current, you know, top line revenue in light of what's going on with the shutdown right now. So, you know, and he's got one company that's got 600 employees, but again, because we're able to do it, you know, by location, then he's going to be eligible to apply for the PPP here through his local bank.
Yeah, so this came out pretty quickly, the applications and so on, because I believe they had 30 days to get this out and they got it over quickly. And there was a question, I believe, that came up just for clarification. These are non-recourse loans, and the non-recourse loan does not have to be repaid, and the Act specifically exempts that from becoming taxable income. So this is a really good opportunity for all of these businesses, again, particularly since dealing with one of the hot spots here that are very, very important to try to get people back to work.
Yeah, and I think we're going to try to have another session on just the Paycheck Protection Program, but the timing is key, getting folks in there because the funding is capped. So you're going to want to get in before the money is gone. So you need to talk to your clients about getting in and making those applications quickly as soon as they're able to do so. We talked a little bit about the employer retention credit. It's a 50% tax credit on the employer paid portion of payroll taxes on wages up to $10,000 per employee. Excluded from this tax credit are payroll taxes that are covered under the new programs. Again, no double dipping. It's a good option for employers that aren't eligible for the Paycheck Protection Program. Keith, you and I talked about that a little bit. I don't know if you have something you want to add on the
Well, you mentioned like
retention credit.
NAIFA wouldn't qualify for the Paychecks program, but NAIFA could qualify for this particular program. And that's knowing the type of business, how they're organized, particularly when you get into the nonprofit world, how they're organized.
Exactly. Also the delay, I'm sorry, I'm having a,
One more, next one.
yeah, I'm having a little trouble with the controls. There's the delay in payroll tax, same thing. If you're taking advantage of other programs, you don't qualify for this, but if you're not eligible for some of the other programs, then you definitely want to. Employers would be able to delay the payment of their 2020 payroll taxes until 2021 and 2022. It provides obviously some extra cash flow for those businesses. This provision applies to self-employed individuals as well. It requires deferred employment tax be paid over the following 2 years. So half would have to be paid in 2021, the other half by 2022.
No comment on this. I wanted to get to this slide because this is it's hard to understand how powerful this particular part of the act goes. So Todd.
Yeah, so we have a lot of clients that are carrying NOLs in their companies. So what's beautiful about this is that you can actually amend your clients, or clients can, your business owner clients can go back and amend their tax returns all the way back till 2013. And to be clear about what that means is that these NOLs, their net operating losses, typically, you can only use them on a limited basis depending upon a number of different factors. And we have a lot of clients that are sitting on these suspended NOLs that they're waiting to use in the future. Well, as a way to juice this deal, now you can have your clients go back, amend their tax returns for the past 7 years, and literally go back and get cash back from the government and soak up all those NOLs that they've been just, suspended. That is a huge benefit to the business owner community that y'all want to get in front of.
Yeah, so the Tax Cuts and Jobs Act really limited NOLs, and this getting back is, again, it's an opportunity for you to call business owners and talk to them about these things and differentiate yourself from other people out there. Thanks, Todd.
Thank you.
Yeah, there's another provision that's put in there that it allows employers to assist employees with their student loan debt. I won't go into too much detail here. We do have some of the provisions outlined. I know we're short on time, but want to make that available. And if it's something that you're working with employers on educational programs, it's something that, again, another opportunity for you to sort of reach out and talk about what might be available to them. And the group health plans, they obviously need to cover diagnostic testing. What this basically does is it's putting in a requirement on group health plans to cover not knowing if a vaccine is available yet. So as soon as that vaccine is available, the group health plans are going to have to cover that with no cost sharing, no prior authorization or medical management requirements. Talked about the resources. This is where you're going to have a list of stuff. Treasury, as we said, just put out information. They'll continue to add guidance and information, but this will give you a direct link to, if you have someone that is actually a lender and needs information, if you have clients that are actually the applicants, where they go, how they can actually apply, begin the process, find out what information is needed when they start that process so that they can go in with the materials that they need. Small Business Administration has information as well on the loans. One of the best documents that I've seen for initial client outreach is the House Small Business Loan Chart. So if you look under Congress, there's the frequently asked questions that came out of the Senate on some of the provisions, but this House Small Business Loan Chart goes through that disaster loan and does sort of a side-by-side, who's eligible, what do you need to know, what some of the terms are, just in a really quick sit-down side-by-side comparison. And I think it's helpful to start the conversation, and then you can go through and talk with your clients about what is needed, what might be best for them. I think that is going to wrap us up. Keith, I know we're getting tight on time. Do you have additional information that you want to share with the group before we turn things back over to Cammie?
No, I just want to thank Mark and Todd for stepping up and on short notice and doing this with us, and all of you. I know it's a difficult time out there right now. Just hang in there, Godspeed, and if we can help in any way, let us know. But I'll flip it back to Cammie.
All right. Well, thank you guys. That was some great information and a lot of information. I appreciate you all being on and sharing all of this. There's so many changing things and so many great things that are coming together with us, and I appreciate you all being a part of this. So the slides and presentation, lots of people have asked about that. The slides and presentation will be on the member website. So you can access a recording of this, you can access the slides, you can access the resources there. As I said, there's a toolkit of the different slides, of the various different resources that NAIFA has put together there as well. And due to the overwhelming response from this and all the questions, you all saw lots and lots of questions coming through, depending upon the availability of our panelists, next week, we will have a special bonus session with them to answer the questions. This will be for members only, but our goal here is to really be responsive to the needs of our members and make sure that we're providing you with the tools and resources that you need to empower you as we move forward in this new era. So I want to remind everyone as well as the other town halls that we have set, and these are open to everyone. They're listed there on the screen. You can register on the website, or you can use the links that were sent to you for this. Thank you all for being a part of this, and we will take a deeper dive later on. In the meantime, you can email questions in as well. You can email those to either myself or Suzanne Carwin or anyone on the executive committee. So with that, thank you all, and we will talk again next Monday on our next town hall with Jamie Hopkins. So thank you and goodbye.